What's going on, everyone? Welcome to the video. This is going to be a really good one on how you can eliminate the fear of losing and how you can have more confidence in your trading. I think it's super important that those who are inconsistent and those who are a bit newer to really listen and pay attention to what I have to say, because if you are someone who's been trading for a long time and still can't find that consistent success, I have some really good points that can help steer you in the right direction. So we're going to go over an example on Boeing to where I can show you the proper risk to reward strategy and how I went about playing this and how you can really eliminate the fear of losing and how you can take on more confidence in your trading. So before I go over Boeing, I want to go over some key points. The first one that I have is remove the guessing out of your trading. You are not smarter than the market. Once we enter the trade, we have absolutely no idea what's going to happen. We can't control what's going to happen. The only thing we can do is establish our risk. We can establish where our entry is going to be, where our stop loss is going to be, and where our targets are going to be. We have absolutely no idea what is going to happen after. If you're entering the trade without a plan and you're not developing a thesis before you enter, you're simply guessing. And you have to realize that if you're doing this and you're not formulating a plan before you enter, most likely than not, you're going to be wrong. You're not smarter than the market, and the guessing is not going to last in the long term. So at JWJ, and for me personally, I like to focus on longevity and being consistent over a long period of time, rather than just hitting on a few big plays and being inconsistent overall. So that's my first point. Really remove the guessing out of your trading and understand that you are not smarter than the market. Second, losses are inevitable. The fear of losing is most likely the reason why you are losing. So this is something that's big for the psychology side. A lot of people who are in the market are afraid to lose on their trades and don't put on really good plays because of this fear. This is something that I struggled with when I first started. I have absolutely no shame in saying it. Anytime that I would see red in my account or I would see my P&L move up and down and get close to my stop loss, I would develop a fear and I would not enter future trades because of my past experiences and because of the fear of losing money. So you have to understand that it's part of the game. If you're going to last long term, losses come with it. You just have to make sure that your wins are bigger than your losses and that you're developing a plan that removes the fear out of your trading and out of having losses. If you are scared, you are over positioned and your risk is not established before you enter. So this kind of goes hand in hand with the point two. You have to have confidence in your position. You have to remove that fear of losing. And a way you can remove that fear is by adjusting your position sizing. So a lot of people who enter, who get out of great winning trades too early, and if you notice this with yourself, it's probably because you're over positioned and you're not really establishing that risk to reward ratio before you enter. A big problem that I see with new traders is they're over positioned and they make emotional decisions because of their sizing in the trade. You have to size for zero and you have to make sure that you have everything established up front before you enter and you're in with proper position sizing according to your account size. And if you're really struggling with getting out too early or getting shaken out too often, you have to buy more time in your contracts. No matter how tempting it may be to play weeklies and hold for those longer percentages, you have to suck it up and buy a little more time so you can avoid making those emotional decisions that weekly options give you with the volatility. So this is something I also noticed when I first started. I would only play weeklies, and of course you can have those big gains and you can have those large percentages, but more time than not, you're going to get shaken out of some really good winning trades, and if it doesn't go your way right away, you're probably going to give it up and you're probably going to sell for break even or a very small gain. When you give it a little bit more time, you give yourself some flexibility and you allow your plan to come more to fruition rather than just playing weeklies and holding for those smaller gains. So when you buy a little more time, even when you're day trading and scalping, you give yourself more flexibility and you give the trade some room to breathe. Overall, trading is more about mastering yourself than it is about mastering the market. The sooner you realize this, the sooner you can become a great trader. This is absolutely vital to understand. Most of the time, guys, I put on 1 to 2 trades a day and then I'm done. I know that if I put on more trades, I'm more susceptible to higher risk and I'm more susceptible to making emotional decisions. So that's what I know about myself, and I know that mastering myself is more important than getting every single thing right in the market. So I realized this early on in my trading, which was a blessing, and it has allowed me to become a great trader because I don't overtrade now and I only play the market when things are exactly how I want them to be. So I only play when price comes into my levels and into my zones, and I don't waste my time on anything in between or any of the other noise. This is something that's really helped me in my trading, understanding the psychological part of it, and that most of it is just sitting and waiting and then executing with size once your opportunities are presented. So I'm not that type of person to be coming in and guessing on earnings and to be playing all these micro plays in and out throughout the day. I like to formulate a plan in the morning when I put up my watch list, and then I like to play my plan, and then that's it. If anything happens after, it's just extra. I'm not really worried about it. I don't care because I'm sticking to what works for me, and I understand that mastering myself is more important than mastering the market. So these are just some key points that I want to go over that can help you eliminate the fear of losing. And then at the end of this video, I'm going to also share some really cool key points that you can screenshot and some rules that you can apply to your own trading, especially for those who are really inconsistent. So now that we just went over the key points, let's go over this example on Boeing. So this is something that I posted in the pre-market plan in the watch list, and I'll pull that up through our Discord. So IWM was another great play that I posted, but just for the purpose of this video, I want to go over Boeing. So I said I want to open longs if we can break out above 159.40 or use 156.29 to 156.02 as support. Above 159.40 we have a daily gap to fill, and I like the 160 calls for this bull case. If we lose 156.02, longs will be invalidated and price can make its way down into further support. So I always post some commentary with the chart to give some context to what I'm saying, and this is what I was seeing in the pre-market plan and what I posted in my watch list before open. So that is how I post it every morning, and then going over to the chart to kind of break down exactly what I saw. So yesterday Boeing had some nice volume end of day, as we can see here, and then we have this area of built up consolidation before the big move higher. So again, just like all my previous videos, we have this area consolidation followed by the breakout, so this leaves behind our area demand. And then again, instead of focusing on the entire zone, we want to focus on that last candle before the breakout, and that's going to be the close and low of this 15-minute candle right here. After the consolidation, this was the point of the breakout, and that 156.29 to 156.02 establishes our area demand, and we want to see buyers step in once price makes its way back into this area. So this is what I saw in the bigger picture on the 15-minute, and then now let's go down to a 5-minute and a 1-minute so I can show you the scalping standpoint and how I went about playing this. So zooming into the 5-minute, you can see the consolidation build up before the move higher, and going into today, I wanted to see price either break out above that 159.40 and use it as support for a move higher, and we can see right now it's breaking above it. We have this flag as well. But of course, the most low risk entry is the dip buy into demand from 156.29 to 156.02, targeting that area of resistance. So this is the play that I took. My entry was on the first touch, that first wick within this range, and we can see it on the 1-minute here as well. So my stop once I enter would be a 5 or 10-minute close bottom range of demand at 156.02. I'm not getting stressed, and I'm eliminating the fear of losing because I understand where my entry is going to be, I understand where the stop is, and I'm understanding what my initial targets are going to be. So once I get long inside of demand, my first target is going to be VWAP. This is where I want to scale out 1/4 or half, and then I want to leave the rest of the position going into that previous high a day and that 159.40. So this is where I look to take off most or all of the position, and then I leave runners to do anything past that. So this really helps you eliminate the fear of losing by developing a plan, and this is something that helps build my confidence and can help build your confidence by developing a plan in this much detail. Another thing you can notice as well, and something that I talked about in my videos from a few weeks ago, is the lower low double bottom with the RSI divergence. So we can see on the 1-minute, the price action made a lower low double bottom, and then we also have the higher low on the RSI. So this can also help you with your entry. I'm not entering because of this, I'm using it in context with the demand zone. So this is something that I like to use in my trading and something that helps me give more validation to my entries. And that's a really cool tool that you can use in your trading. So I broke down how we found the zone and found the levels on the 15-minute, and then also the 5-minute and the 1-minute to be a little more pinpoint. And now I also want to show you how the premium moved. So here I have the 160 call for next week. And if you remember from my plan that I just showed you from the Discord, these were the calls that I wanted to play for either a scalp or a swing depending on your risk tolerance. So now looking at it here, we come down, we find support within demand. And then from this 410, 409 area on the contracts, this is where I entered, and we made about a 40% move in 20 minutes on these contracts. So this was a really good play. I eliminated my fear of losing by developing a plan and sticking to my plan until my thesis was wrong. This is something that a lot of you can take with you and can apply to your own trading, especially those who are inconsistent. I know options are super hard and super difficult to get consistent with, but if you develop a plan, it makes it a lot less stressful and it eliminates that fear of losing. So I just wanted to go over that Boeing example real quick on how I established my risk before I entered and how I was able to take the trade with confidence for about a 40% move in less than 20 minutes. Now to finish the video, I want to go over some rules that I typed out that I think are important, especially if you are someone who is extremely inconsistent and you get frustrated often. I'm not going to read through all these, but this is just a resource that you can pause the video and read through, or you can take a screenshot and keep these by your desk. So if you're someone who's inconsistent, you need to apply these rules to your own trading, and I guarantee you'll start to see a turnaround if you stay true to these rules and you focus on mastering them. And with that said, that's going to be all for this video. I would greatly appreciate it if you guys left a thumbs up and also commented, and make sure if you are new to subscribe to our channel. Thank you, and I will see you in the next video.